All right, everybody, welcome back. Today, we're diving deep, way deep into the world of banking and investing. Now, I know what you're thinking. Banking, boring. Right.
Right.
Wrong.
Yeah.
This stuff is actually super fascinating, especially right now with all the changes happening.
Yeah.
Like, how do you even know where to put your money these days?
Right, right.
Do you stick with the old reliable banks?
Yeah.
Or jump into this whole digital, revolution?
It's a good question.
Well, luckily, we've got this document. It's called Investing in Banks and Digital Banking.
Okay.
And it's chock full of insights. We're going to unpack all that, talk about everything from traditional banks to, get this, neobanks.
Neobanks.
Yeah, you know what those are.
I do.
Okay, good, because we're going to break it all down. We'll look at how traditional banks are partnering with fintech.
Oh, yeah.
And, most importantly, how to actually figure out if it's worth investing in any of this stuff.
Right.
So let's start with the basics. The big guys, the traditional banks. You know, the ones you see on every street corner.
Yeah, those huge buildings, right.
Exactly. They've been around forever.
Forever.
So, I mean, they must be doing something right.
Yeah, I mean, they've got that long history, huge customer base. They really do offer pretty much every service you could possibly imagine.
Yeah.
I mean, from simple checking accounts to, super complex investment products. That's what a lot of people are still looking for.
Which makes them seem pretty safe, right? Like for investments.
You would think so.
But this document, it actually says it's not that simple.
No, it's not. It's
like you can't just invest in a bank because you recognize the name.
Right.
There's more to it.
Absolutely. You have to dig a little deeper,
Yeah.
Look at things like their financial performance, for instance.
What does that even mean, though?
Well, one key metric is something called ROE.
ROE?
Yeah, return on equity.
Okay.
And that basically tells you how efficiently a bank is using its assets to actually generate profit. So higher ROE means they're better at making money for their investors.
Makes sense.
And also, can't forget about the management team.
Oh, right. People in charge.
Yeah, their expertise, their vision. I mean, that can really make or break a bank's success.
That's true for any company, really.
Yeah, pretty much. Yeah.
All right. So we've got the old guard, the traditional banks, but now let's talk about the new kids on the block.
Okay. The disruptors.
The disruptors.
Yeah.
The digital side of things.
The digital way.
Like everything is going digital.
Everything.
And banking is no exception. So, we're talking mobile banking.
Of course.
Online platforms.
Yeah.
And then there's this whole thing called neobanks.
Yeah.
Have you heard of these?
Oh, absolutely. Neobanks are completely changing the game.
So, what even are they?
So basically, they're like banks, but completely digital.
So no buildings at all?
No branches, no buildings. Everything happens online on your phone.
Wow, that's pretty wild.
Yeah.
So what makes them so special?
Well, I mean, they're attracting a whole new generation of customers, right? They want sleek apps, personalized service, and banking whenever they need it.
24/7.
24/7.
Makes sense.
But for investors, the big question is growth potential.
Yeah.
Are these neobanks actually attracting new users?
Right.
Can their technology handle millions of transactions per second?
So it's not just about being cool and digital.
Not at all.
You got to have the substance to back it up.
Exactly. You got to be able to scale.
Okay, so we've got the traditional banks.
Yeah.
We've got the digital disruptors.
Right.
It seems like this epic battle, right?
It
Old
does.
versus new. But here's where things get really interesting.
Oh.
It's not just a battle. It's like a partnership bringing.
A partnership.
Interesting.
Yeah, peanut butter and jelly.
Oh, okay, yeah, I like where you're going with this.
Two totally different things, but together they're amazing.
Oh,
That's what's happening with traditional banks and fintech companies.
Fintech, okay. Yeah, they're teaming up.
They are.
Yeah, it's called Fintech Fusion. Have you heard of this?
I have. It's a really interesting trend.
So, give me an example. How does this actually work?
Okay, imagine a big traditional bank.
Okay.
And they want to improve their, let's say, loan approval process.
Makes sense.
It can be really slow.
Yeah, it's a bane.
Yeah, so they partner with a fintech company that specializes in AI-powered loan underwriting.
Okay, so they're bringing in the tech experts.
Exactly. The bank gets to use this cutting-edge tech to make loan approvals way faster, more efficient.
And cheaper, probably, right?
Potentially.
Yeah.
And the fintech company, well, they get access to the bank's huge customer base.
It's like a win-win.
Exactly, a win-win for everyone.
Okay, so that's pretty cool for the banks and the fintech companies.
Yeah.
But what does this mean for, regular people like me who might want to invest in all this?
Well, these partnerships, they're a big signal of innovation. It shows that the bank is willing to adapt, willing to embrace new technology.
To stay competitive.
Exactly.
So it's a good sign.
Yeah, I mean, it can lead to more efficient banking, personalized services, and hopefully, lower costs for customers.
Which ultimately benefits investors.
Right, exactly.
Okay, makes sense.
So, we've got traditional banks, we've got digital disruptors,
Yeah.
and now we've got this, fusion of fintech.
The peanut butter and jelly.
The peanut butter and jelly.
It's a lot to keep track of.
It is.
But wait, there's more?
Oh, no.
The document also talks about these huge trends shaping the industry.
Oh, yeah, the trends.
First off, everyone's going mobile.
Yeah.
I mean, think about it.
Yeah.
When was the last time you actually went inside a bank?
It's been a while.
Right. It's all happening on our phones.
Mm-hmm.
And then there's this whole contactless payment thing.
Tap and go.
Tap and go.
Yeah.
I can't even remember the last time I used cash.
Right. It's becoming like a relic of the past.
It really is.
Yeah.
But for investors, how do these trends actually matter?
Well, let's take contactless payments as an example.
Okay.
It raises some big questions for investors, like which banks are actually developing their own payment platforms?
Right.
Which ones are, totally reliant on third-party solutions?
So they're just piggybacking.
Exactly.
Got it.
That can really impact their future revenue.
Yeah, because if everyone's doing contactless and they don't have their own platform,
they're missing out.
They're missing out.
So, you got to think about, are they shaping the future?
Right. Are they adapting?
Exactly.
Okay. So mobile banking, contactless payments, those are big. But there's another trend I've been hearing a lot about, and it's sustainability.
Oh, absolutely. ESG is becoming a huge focus in banking.
ESG?
Yeah, environmental, social, and governance factors.
So banks going green?
More than just going green.
Okay.
It's about how they're lending money, how they're investing, taking into account those environmental and social impacts.
So it's like ethical banking?
In a way, yeah. And for investors who really care about sustainability, a bank's ESG performance can be a major factor in their decision-making.
So it's not just about making money, it's about making money the right way.
Right. Responsible investing.
Okay, but how can you tell if a bank is actually serious about ESG? I mean, is it just good marketing, or is there a real impact?
That's a really good question. I mean, you got to look beyond the marketing hype, right?
Right, the greenwash.
Exactly. You got to examine their actual policies and practices.
Okay, so how do you do that?
Well, you look at their investments. Are they putting money into renewable energy?
Right.
Are they promoting financial inclusion?
Right. Making banking accessible to everyone.
Exactly. Those are the kind of tangible actions that really make a difference.
Right. So we've got all this innovation happening.
Yeah.
It's exciting, right?
Yeah.
But we can't just ignore the risks that come with banking.
Oh, absolutely not.
I mean, there's always risks.
Always.
And one of the biggest, I think, is regulations.
Oh, regulations. Yeah, huge.
They can really impact everything.
Everything. They can be a real headache.
But they're important, right?
Oh, absolutely.
It's like they're the guardrails on the highway.
Okay, I like that analogy.
They keep things safe, but sometimes they slow things down.
Yeah, for sure. Take open banking regulations, for example.
Okay, what's that?
So these regulations, they're forcing banks to share customer data with third-party apps.
Really?
Yeah, which sounds scary, but it can actually be a good thing.
How so?
Well, it can create opportunities for fintech innovators.
So more peanut butter and jelly situation.
Exactly. But of course, there are challenges for the banks, too.
Like what?
Well, they have to worry about data security now more than ever.
Right, keeping that information safe.
Yeah, and also competition. I mean, if anyone can access their customer data, that opens the door for new competitors.
Okay, so it's a balancing act.
It is.
Innovation, safety, competition.
It's a lot to juggle.
It is. So for investors, what should we be looking for when it comes to regulations?
Find the banks that can handle the regulations efficiently.
Okay.
But at the same time, they still need to be offering innovative products and services.
Right. You can't just be playing it safe.
Exactly. You got to find that sweet spot.
Okay, so regulations, that's one big risk. But what else?
Well, cybersecurity is a huge concern.
Oh, yeah, with all of the hacking and data breaches these days.
Exactly.
That's scary.
It is. And as banks become more reliant on technology,
Which they are.
they become more vulnerable.
So for investors, what do we need to look for?
Look at their cybersecurity infrastructure.
Okay.
How much are they investing in security?
Right.
And also, Their track record. Have they had any breaches in the past?
How did they handle it?
Exactly, exactly.
Okay, so cybersecurity, big one. And then I guess there's always just the general competition.
Oh, yeah. The competitive landscape is constantly changing.
Especially with these fintech startups popping up everywhere.
Everywhere.
So how do you assess that risk?
You look at how the bank is adapting.
To the new players.
To the new players, the new technologies. Are they evolving?
Or are they stuck in the past?
Exactly.
Okay, so we've got regulations, cybersecurity, competition. It's a risky business.
It is.
But that's why we diversify.
Diversification is key.
Don't put all your eggs in one basket.
Exactly. And that's especially true when it comes to banking.
So, like, how do we diversify in this context?
Oh, you spread your investments across different banks, different types of banks.
Got it.
And even different regions.
So, like, geographically diversify.
Exactly. Because if one bank or one region faces challenges, your whole portfolio isn't impacted.
That makes sense. It's like a safety net.
Exactly.
Okay, so, wow, we've covered a lot of ground here.
We have.
We talked about the difference between traditional banks and those digital disruptors. We explored fintech partnerships.
The peanut butter and jelly.
The peanut butter and jelly. We talked about market trends, risk assessment.
Very important.
And diversification. But, like, with all this information, what's the bottom line? What should investors actually be doing?
Well, I would say look for banks that are well managed.
Okay.
Financially sound.
Right, so they're actually making money.
Making money, and importantly, adapting to the changes.
Right, evolving with the times.
Exactly.
So embracing innovation.
Yes.
Navigating those regulations. And managing risks.
Proactively.
Okay, and I think one thing we can't forget is to check those financials.
Oh, yeah, absolutely.
Look at their revenue growth, their profitability.
All those key metrics.
All those numbers, they tell a story.
They do, they do.
All right, so there you have it, folks. That's our deep dive into the world of banking and investing.
Yeah, it's a fascinating world.
It really is, and it's constantly changing.
Constantly evolving.
So I guess my final question to you and to everyone listening.
Okay.
If you were to invest in banking today, would you go with those established traditional banks? Or would you bet on the exciting potential of those digital disruptors?
That's a tough one. I think it really depends on your individual risk tolerance and investment goals.
That's fair. That's fair.
There's no right or wrong answer.
Exactly. But hopefully this deep dive has given you the tools and the knowledge to make those decisions for yourself.
That's the goal.
So keep exploring, keep learning, and thanks for joining us.
Thanks, everyone.